Tom, thank you for joining us this evening, I should say. And I guess the big question we'd all be asking is there reason to believe that we've hit a bottom?
Yes, I think the market has established some type of bottom. I don't know if this is October '08, where we still had some wood to chop, but stocks were viable, or if it's the final bottom. But I think what's been encouraging is we've had some bad news. I mean, today we got some horrible economic numbers from the Dallas Fed, and the markets managed to rally. We got a really horrible jobless claims number last week, and we managed to rally. So if we're rallying on bad news, I think that's a sign that we're probably at a bottom.
Tom, let me play devil's advocate for just a moment, which is one of the things that happens at the end of every month, and we're seeing it right now. There is huge inflows into the market because of what's called rebalancing that pension funds and other big investors have to do. How much of it is that?
There is definitely some effect. There's been anticipated rebalancing by our clients, and because bonds massively outperformed equities this quarter, the pension rebalance would be quite significant. I've seen some estimates that are several $100 billion, so it could be quite large. But it all is part of that process of helping the market shift in favor of buyers. For the last 6 weeks, the market has had unrelenting selling pressure. People have deleveraged, and sentiment has gotten so negative. So even if it is kind of a mechanical benefit, that does help, really help reestablish market confidence.
Tom, of course, we've seen false bottoms before. Stocks tank, then they start to pick up some steam before dropping again. Why should this time be different? That's really the unknown question, because market bottoms can only be really established with retrospect. I think this week's going to be an important test because, we have the payrolls number. We've got so much data coming, and the ISM in the next couple of days. If we don't see markets lose a lot of conviction during that time, I think it's going to tell us that a lot of bad news is baked in. And I know people are going to roll their eyes because they're saying stocks need to fall 50%, but stocks at the epicenter of this crisis have already fallen 50, 60, 70%. So there's already been a huge correction taking place within the market. Tom, final question for you, and I think this is the key for any investor who's out there this evening thinking about this. What do you think the market believes is the length of this crisis? Meaning, how long do you think the market is already calculating that most people in America are going to be home, and that not just a home, but that there's going to be a period, and I don't know whether you think it's weeks or months afterwards, where we are doing social distancing and most people are going to work and then they're going home, but they're definitely not going to the restaurant or they're not going to the movie theater or whatever. What do you think what do you think the market believes on that answer?
Yeah, from what I can tell from speaking to our clients, and we've been in constant contact, the market is going to look for the beginning of the end. So the high point of the crisis is going to mark when investors can start thinking about the post-crisis world. And so I think Italy has been closely watched because it looks like they're finally apexing on the number of cases. New York's going to be incredibly important, New York City and the state, because it really is the center of the outbreak. And the data. Tom,
give me a date. Give me a date certain. Are we talking June? Are we talking
I
July, August, September?
So I think the peak.
Middle of April.
Height of the crisis will be mid-April, and that's when people can start looking at the beginning of the end. So 2 weeks from now.
Okay, that's the height, though, not the end. Okay, Tom Lee, thank you so much for joining us this evening.